Hello and welcome. If the thought of doing your first tax return is sending a little shiver down your spine, don't worry, you've landed in exactly the right place. We've teamed up with the experts over at My Tax Accountant to put together this guide to make the whole 2026 self-assessment process as clear and stress-free as possible. So let's dive in.
All right, let's kick things off with a number that might just blow your mind. According to HMRC's latest figures, a staggering 1.1 million people missed the recent tax return deadline. That is a huge number of people now facing automatic penalties. And you know what that tells us?
It tells us that you are absolutely not alone in this. I get it. Whether you're a brand new freelancer, a landlord, or a company director, the whole process can feel like a massive, confusing puzzle. But honestly, it really doesn't have to be that way. We're going to walk through everything you need to know, one step at a time.
So, first things first, do you actually even need to file a tax return? To make this all super practical and easy to follow, we're going to follow the journey of someone we'll call Anya. Let's imagine she's a freelance graphic designer just starting out in London and navigating her first year of business.
You see, the list of who needs to file is actually a lot longer than most people think. And for Anya, our designer, that very first point is the big one. As a self-employed sole trader, the very moment her gross income for the tax year went over that £1,000 mark, she was legally required to register. And it's the same story for business partners, many landlords, and directors with untaxed income.
Right, so that £1,000 figure, that's what's called the trading allowance. And it's your first really important number to remember. So if Anya had only made, say, £950 from all her design gigs for the whole year, she wouldn't even need to tell HMRC. Pretty neat, right? It's designed to keep things simple for those little side hustles. But the second you earn £1,001, bam, you're in the self-assessment system.
Right. So Anya's in. She knows she has to file. So what's the very next step? This is the registration part. And let me tell you, this is where you have to be organized. You absolutely cannot leave this to the last minute.
So it's basically a three-step process. First up, she's got to set up a government gateway account. Think of this like your digital passport for all government services online. It's super useful. Next, she has to actually register for self-assessment itself. For a sole trader like her, that means filling out a form called the CWF-1. And then, she plays the waiting game. She has to wait for a very, very important letter to show up in the post. And this is what's in that letter. Her unique taxpayer reference, or UTR. It's just a 10-digit number, but trust me, without it, you cannot file your tax return. Full stop. It's basically your unique ID for the entire tax system.
So yeah, think of it as your golden ticket into the world of tax. When you get it, take a photo of it, write it down, keep it somewhere safe, because you're going to need it every single time you deal with HMRC.
Okay, let's move on to the bit that everyone loves to hear about, how to legally lower your tax bill. We're talking about business expenses. For any freelancer like Anya, getting your head around what you can and can't claim is just fundamental to running a smart business.
So, the magic words from HMRC are wholly and exclusively. What does that actually mean? It just means the cost has to be 100% for your business. So, what if you use your mobile phone for both personal calls and client calls? Well, in that case, you can only claim the business portion of your bill. Makes sense, right? Let's bring this to life for Anya. That expensive Adobe Creative Cloud subscription she needs? Absolutely, that's a claimable office cost. The train ticket she bought to go meet a client up in Manchester? Yep, that's a travel cost. Her business insurance? You bet. Even that online course she took to sharpen her animation skills, that's claimable as training because it directly helps her do her job better.
And here is a massive pro tip, and I really can't stress this enough. Keep every single receipt. Why is this so important? Well, HMRC has the right to ask you for proof of your expenses for up to 5 years after the deadline. Seriously. So good record keeping isn't just a nice to have, it's your legal duty, and it's your best friend come tax time.
All right, this next section is super important. So grab a cuppa and stay with me, because understanding this part could genuinely save you hundreds, if not thousands of pounds. We're going to dive into the most common and costly tax traps people fall into. And honestly, just knowing what they are is half the battle won.
Trap number 1, forgetting to declare all of your income. Look, it's so easy to do. You forget that little cash-in-hand job you did last spring, or that tiny bit of interest you earned on a savings account. But HMRC wants to know about everything. The clue is right there in the name, self-assessment. The responsibility is all on you to get it right.
Oh, this is a classic one. Mixing up your personal and business cash. When your client payments are landing in the same account you use for your weekly shop and your Netflix subscription, it just becomes an absolute nightmare trying to figure out what's business and what's personal. The solution? It's so simple. Open a separate bank account just for your business. Honestly, it will make your life a million times easier.
Okay, trap number 3 is a little more technical, but if you're a higher rate taxpayer, this is absolutely crucial. See, if you pay into a private pension, you automatically get basic rate tax relief. But if you're a higher or additional rate taxpayer, you have to actively claim the extra bit of tax relief back on your tax return. HMRC won't just give it to you. If you miss this, you are literally just handing free money back to the tax.
And finally, a classic paperwork trap, using the wrong bits of the form. Your main tax return is called the SA-100. But then you have to add these extra bits, called supplementary pages, for different types of income. So for her freelance work, Anya needs the SA-103 page. But if she also rented out a flat, she'd need to add the SA-105 page for property income. Getting this wrong just causes massive headaches and delays.
Okay, let's talk deadlines. This is, without a doubt, where so many people get tripped up. These dates are non-negotiable, so let's get them locked in. Get your phone out, open your calendar app, because you're going to want to put these in right now.
Right, here are the 3 big dates for your diary. First, Anya has to be registered by the 5th of October 2026. The main event, the big one, is January 31st, 2027. That's the deadline for filing your online return and paying whatever tax you owe. And they are not messing around. If you're even 1 day late, it's an instant £100 penalty. And that last date, July 31st, that's for something called payment on account. It's basically an advance payment towards your next year's tax bill.
So after all that, how much tax is Anya actually going to pay? Well, the most important thing to get your head around is that you don't pay tax on your total income. You pay tax on your profits. That's your total income minus all those allowable expenses we talked about. And the first chunk of that profit, up to £12,570, is completely tax-free thanks to your personal allowance.
But wait, there's more. It's not just income tax you need to think about. You also have to factor in national insurance. Now, the good news is, for self-employed people, it's gotten a lot simpler recently. You don't really pay Class 2 anymore. You just get a credit for it if your profits are high enough, which is really important for your state pension down the line. The main one you'll actually pay is Class 4, and that's just calculated as a percentage of your profits over that same tax-free threshold.
All right, we're nearly at the end, but before we wrap up, I want you to look into the future with me for a second. The way we do our taxes is undergoing a massive change, and you need to know what's coming. It's called Making Tax Digital, or MTD for short.
So what on earth is Making Tax Digital? Well, in a nutshell, it's HMRC's big plan to drag the entire tax system into the 21st century. The biggest change? Say goodbye to doing one single tax return at the end of the year. Instead, you'll need to keep all your records digitally and send quarterly updates to HMRC using special software.
And don't think this is some sci-fi concept for the distant future. It's happening right now. As you can see, if your income is over £50,000 a year, you need to be following these new MTD rules from April 2026. If it's over £30,000, you've got until April 2027. The key takeaway here is to start getting ready for this now, even if you're not over the threshold yet.
Honestly, just getting used to using some simple accounting software or even a good spreadsheet now is going to make the switch to MTD totally painless when your time comes. A little bit of prep now will save you a world of stress later. It's a no-brainer.
Now, it's really important for me to say that everything we've talked about today is for general guidance. Think of it as a really solid starting point, but it is not a substitute for proper professional financial advice that's tailored to your unique situation.
So, how are you feeling? After all that, is your head still spinning a little? Maybe your finances are a bit more complicated than Anya's. Perhaps you've got rental income, investments, or capital gains to think about. If that's you, what's the best thing to do?
Well, the smartest move is always to talk to an expert. The team at My Tax Accountant live and breathe this stuff. They can give you professional, one-to-one advice that makes sure you're paying the right amount of tax and not a penny more. You can give them a call on 0208-570-8531 or drop them an email at info@mytaxaccountant.co.uk. And of course, for more guides just like this one, make sure you hit that subscribe button on the channel. Thanks so much for joining me.